Well, good evening, everyone. Let me move on to the presentation. There we go. So essentially what I'm going to talk about is our story and how we actually brought peer-to-peer lending to Canada. And the reason for this is actually I want to share a story about starting a finance company in your basement. The story I often hear at conferences around the world actually and at meetups like this is it's impossible to start a financial services company from in your basement. So I'm going to share the story of how we actually started literally in a university dorm room and brought a product to market. So we wanted to start a peer-to-peer lending company in Canada because it's an industry that was very underserved and nobody actually brought it to market historically. When we came to market and when we started actually working on this concept, we looked at what the history of this had actually been. And what we very quickly learned was that the two companies that had ever tried to do this, so Community Lend, which some of you may know, and IOU Central, had either pivoted their business models or shut down. And the common industry theme that we heard from that was, well, maybe you should have learned. Like, why would you try start something that people have not been successful at in the past? So that was kind of like the first piece of negative feedback that we got. But despite that, being young entrepreneurs and young co-founders, we said, you know, screw that, screw what other people are saying. We want to go ahead and do it anyway. So that really brings me to kind of the initial phases and actually the startup phase of the peer-to-peer lending platform. So step one, the very first thing that we did is we were Ivy business graduates, and we went and spoke to our Ivy business professor. So we went and asked, okay, we want to start a peer-to-peer lending platform. We want to raise money from retail investors. What is it that we actually do? And he said, well, there's this thing called securities law that you should probably take into consideration, which will be funny later in the story. So you need to find a securities lawyer. So we said, okay. Step two was finding a securities lawyer. So we went around the city, went around Toronto, went around Waterloo, trying to find the best securities lawyer, and said, okay, how do we start a peer-to-peer lending platform? And the first 5 or 10 lawyers we spoke to basically said, you can't. There's no way this will ever be done. You guys are wasting your time. Give it up. Just leave. Have no idea why you're here. And eventually, actually in Montreal, we found a securities lawyer who said, you know what, this is really interesting. I'm going to take this on. I'm going to help you guys. Throughout that entire process, we then went to every finance industry expert, whether it was people who were working in the banks, had worked from the banks, and again, we're told, there is no way that you will ever do this. But despite that, we decided to basically spend 24 hours of our lives, night and day, working in a basement, building the technology and building the platform so that we could get a working prototype to market. So 1 year later, we quit our full-time jobs. We launched our business, and essentially we proved that people loved this. And we proved that the initial hypothesis that we had in the market was actually true, that the fact that this had not worked in Canada was not representative of the fact there wasn't a market, but really there was just a huge regulatory barrier to actually bringing this to fruition. But shortly after that, we started to experience some turbulence. Every startup experiences turbulence, but I think about 2 months into the business, our fund transfer services were cut off by some of the banks. And there's a famous Winston Churchill quote, which is, never let a good crisis go to waste. So we kind of turned that into a great PR opportunity and started to get actually a lot of support. You can see here one of the comments on Reddit was, I like it already, after that happened. And then shortly after that, somewhat as expected, we were basically asked to go through a regulatory registration process. So, just to back up a bit, peer-to-peer lending had never happened in Canada, and we were really blazing the path for how this could actually happen. Nobody had actually brought this type of platform to market successfully before. And as a result, because what we were doing was so innovative, we basically had to kind of find a way for us to work within the existing frameworks. I don't like, comparing it to other platforms, like other companies like Uber, who are really just true trailblazers and just ignoring essentially what is the law, what is really available to them. For us, we really did the best that we could to actually fit within the lines of existing regulation. But ultimately, we knew for us to create a platform like this, we had to find a way to actually get this into market, prove that it was a viable product before we went out and spent a whole bunch of time and money working with regulators. And again, got a little bit of bad PR, had to halt operations for a few months because, as I said, at the end of the day, nobody likes an innovator. But when you're going through that type of process, it's really important to go back to why you started it in the first place. So at this point where we were actually shut down and when we went through that regulatory registration process, we kind of put it into 4 key options that we had. And obviously we went with option number 1, which was call into bull, kick, scream, and cry. But seriously, like there were a number of different options for us to go to. You know, serious considerations involved moving to other markets where this was something that was more accepted. But fundamentally, we ended up deciding on staying the course and actually wanting to bring this model to Canada. So this is really the most important part, I think. How do you deal with this type of adversity every day and still wake up every morning and still do this type of business and still, you know, push the frontier forward? We realized that, as I said before, regulation was the only reason that this actually didn't exist in Canada. So there wasn't actually a market reason. It wasn't that there wasn't market demand, but this was something that had just simply not been brought to market before because of regulation. The second is that this is a multi-billion-dollar market in pretty much every other country in the world. So you look at the US, the UK, Australia, New Zealand, China. This is a really massive and growing industry. So we knew that there was something there. And as a result of validating the model and our initial test phase, we had enough ammunition, both from a government and regulatory perspective, as well as from a capital raising perspective, to say, this is clearly a viable model. This is something that works. And that really speaks to, even in finance, where people say you shouldn't be building MVP models, you need to take things very seriously. The ability to actually prove that you can have demand in the market is invaluable. And lastly, I think the reason we stayed is also because we cared. Small businesses make up 90% of the private workforce and 27% of GDP. And, you know, for us as co-founders, we were also idealistic. You know, some people say you have to be a little bit stupid as a co-founder or as a founder to exist. And we were very idealistic about what we were doing. We really wanted this to be a success. And also, this business model is just better. Like, here's some data on LendingClub, which is US peer-to-peer lending platform versus a bank. There's a huge cost advantage to disintermediating a traditional intermediary, right? Like, there's just no way that an intermediary can be as efficient as someone who's connecting two sides of a marketplace. And as a result, the equation essentially ends up is, if you're putting your money into a 3-year GIC, you're earning 0.95% versus inflation being 1.3%, whereas you can put your money in peer-to-peer lending and earn 7% plus. It's kind of like a no-brainer for a retail investor. And the other thing is that the future is really bright when it comes to a market like this. Some of you have probably seen these types of statistics before, but 7 in 10 people say they'd rather go to the dentist than listen to what their bank says. And 1 in 3 people actually believe they won't need a bank in future at all. So, you know, I'm not saying I'm a proponent or I'm a believer of this. We rely very heavily on the banks even today. But at the same time, there's definitely a trend in kind of mentality and shift, particularly in younger generations. And that's really driving a lot of growth in these disruptive platforms. So moving ahead, essentially what we did was we got people to take on our cause. We got people like Tim Hudak, who was an MPP at the time, to take on our cause, go to government and really help us, you know, convince regulators and government that this was important. We got other people, other stakeholders, whether it was the provincial government, the federal government, to actually get involved and start lobbying behind what we were doing. And that's really what worked. At the end of the day, we got enough people behind us. We got investors writing letters to the small business minister. We got people really involved and really taking action behind what we were doing. And that allowed us to actually get through all of those barriers to entry and eventually create a regulatory framework that would allow us to operate. So I think just to recap at the end, you know, the lessons are, if you're working in a regulated space, you need to recognize whether or not you're creating real value for consumers. If you're not going to be motivated and not going to be passionate enough about what you're actually doing. And also the other people won't see value in it. A lot of the reason we got through the barriers that we got through is because we had the support of so many people, you know, our existing client base, people in government, people who really recognized that we were bringing value to the market. So unless you're creating real value, it's really hard to wake up every morning and actually kind of push the barriers of regulation. The other thing that also helped us succeed is relying on other data. So relying on markets like the US and the UK and saying, if this is something that works there, this has to be something that works in Canada as well. The fourth thing, which I mentioned before, bringing an MVP to market cannot be understated just how important that is. Like, really getting some validation in what you're doing, no matter what you are doing, I think is probably the most crucial thing when you're starting any company. And the last thing is, can those people become supporters and advocates? So can the people who are behind you become advocates for your business? So just to summarize and tell you who we are, just in case you don't know, we're a peer-to-peer lending platform. We essentially connect individual investors with small businesses looking for capital. So people like anyone in this audience who wants to put $25 into an individual loan can lend money through our platform to a great small local business. And I'll leave you all just with a quote here. This is actually Steve Martin. He said, "Thankfully, perseverance is a great substitute for talent." I think that can't be true enough. No matter what industry you're in, if you persevere enough, you'll be successful at the end of the day.
So that's a great story of perseverance. I think there's another mic somewhere for people in the audience. All right, we got back there. So now you have the opportunity to ask someone who's been in the trenches with bombs blowing up overhead and, thinking it's going to be the last day every day, about questions of that journey and what it's like. I think this is like one of the best opportunities. So we're going to do 3 or 4 questions depending on how long they are. And there's someone with a mic walking around. All right, on the way.
Cato, fantastic presentation, thank you. I just literally Googled you and I found out that your seed financing was through Kirsch Group. And I was wondering what that journey was like and how did you raise your first seed round?
Yeah, I think like early on, we actually raised capital before bringing to market the first time. And I think made clear essentially what our objectives were. So we wanted to make it clear to everybody in the investment round that there was a real challenge in terms of bringing this to market. So I think transparency is kind of the key reason there. If you're in a regulated space and you know you're going to be pushing the boundaries of what's possible, you may need support later down the road. So I think throughout that journey of actually kind of bringing it to market, being transparent about the barriers that we thought we would face was really the most important part of that. No.
Hi, so just a quick question in terms of how many of your loans have gone bad in terms of your rate of default and how do you hedge your book?
Yeah, that's a great question. So right now, about 0.5% of our loans have gone bad. That will change over time. So kind of like our projected defaults, and we make this information publicly available to all investors. We're projecting somewhere between 4 and 5% as an overall default rate across the portfolio, and that varies from our risk band. So we rate loans from A+ through to E. So obviously A+ with a lower rate and E with a higher rate. So essentially, as I said, 0.5% so far, but we do expect that to rise in future as we grow.
How are the institutions responding to your business, and do you think that'll change going forward?
Yeah, it's funny because being new to a market like Canada, but looking at other markets, we get to see how they've reacted in a market like the UK. As I showed in the presentation, there was a little bit of a negative reaction up front and immediately, and I think it was because we were in a gray market area and a little bit unregulated, which kind of caused that type of reaction. I think there's a bit of a love-hate relationship because you kind of rely on each other, but at the same time, you are somewhat of a competitive threat. I think over time, there'll be more of a willingness for platforms like us to work closer with financial institutions because most finance companies at the end of the day need each other to support the ecosystem.
Hi, how big is your book now, and what's the average turn on the loans?
So that information is not publicly available today, but we are actually going to be releasing that in a few weeks' time, so that will be publicly accessible to everybody.